panel is going to talk a little bit about the continuation, how to become a Bitcoin whale. So I'm going to introduce the panel here, and they're going to tell you how to do that. I wish they'll tell me. I'll be listening as well. First up, Derar Islim, COO of Genesis Global Trading. Next, we have Ian Epstein, president at Oscar Grouse. Alex Mashinsky, CEO of Celsius. And finally, Kevin Lehtiniitty, Chief Strategy Officer at Prime Trust and Chief Product Officer at Bank. I'll let you guys take it away. How to become a Bitcoin whale.
All right. Hey guys, we've got like half an hour to talk about how to become a Bitcoin whale, and I think we're going to get into some trading, some custody, some yield, lending, things like that. But maybe we should kick it off with what even is a Bitcoin whale, right? There's not really an official standard for when you magically get a box in the mail and it says, congratulations, you're a Bitcoin whale. So how do you guys see it? Maybe we'll start with Alex.
Well, the good news is that it's a self-determined level. So you can call yourself a whale, or anyone can call themselves a whale. You know, like I think now that Bitcoin is at 40, 50,000, obviously the bar has gone up. But if you hold several hundred Bitcoin, you're in good shape. You're a whale.
Nice. You guys?
Yeah, I think it's, if you're looking at this space as a significant source of your savings, whether at the corporate or personal level, if you're looking at this space as a place that's going to create multi-generational opportunity to get a jump on the future, if you're looking at this space as a place to sort of be involved in the restructuring of the financial services industry, and it's a significant allocation of your human and financial capital, you know, then I would consider you a Bitcoin whale.
Cool. That's great. Yeah, I mean, from my perspective, working for Genesis Trading, definitely being a whale is twofold. Number one, understanding the aspects and the dynamics of the asset class, because you could be a whale one day and the shark the next day. Market moves a lot. Second, I think holding 1,000 Bitcoin plus these days and executing 100 plus tickets, that is, I think, considered a large trade, a good size whale these days. But definitely, this concept changes every month, every day, and if you ask me tomorrow, I'm going to have a different answer.
Nice. You brought up trading, which is a great place to start, right? If you're going to become a Bitcoin whale, the first thing you have to do is acquire some Bitcoin. The way you guys see it, is there really a difference between kind of institutional purchasing and high net worth purchasing? Is it worth going down both rabbit holes, maybe starting with, if you have an institution, I'm sure we have people who manage, you know, large amounts of capital sitting in the audience, maybe from the traditional markets or things like that. Kind of what's the best place, if you're that fund manager or something like that, to get into this new asset class? Maybe to you.
Yeah, so, you know, Oscar Grouse, we sit in an interesting place. Oscar Grouse is a traditional broker, and our sister company, Enigma, the booth is out there, please come say hi, is started quite crypto native with a number of crypto native clients. We're seeing now in the last 6 months a number of traditional multi-billion-dollar asset managers and hedge funds try to figure out how to get into the space. And what they're finding is that the solutions that were developed for retail involvement are insufficient and incomplete in many instances for institutional involvement, whether that's on the KYC or AML level, whether that's from a risk management perspective, whether that's from a pre-funding versus post-trade settlement perspective. We are very much involved with, as are these gentlemen here, in trying to design a more institutionally satisfactory infrastructure. I would say one of the things that I think institutions differ from individuals with from an investment perspective is institutions will welcome central bank digital currencies. Institutions will want to see central banks either design their own or acted with repo-like facilities as backstops for stable type coins. And so I think that the priorities and the infrastructure needs to be different for institutions. I think we're developing that infrastructure, and I think institutions, and I would suggest this to the individual investors in the audience, should welcome more government involvement, more central bank involvement. It will result in bigger, more important institutional wallets in the space, and I think that's good for everybody to maintain everyone's whale type status.
You guys do a lot of this trading business as well. Do you see it differently?
Absolutely. I mean, Genesis is a broker-dealer in the space since 2013 in New York, and definitely we have been servicing institutions from day one. I resonate with Ian in a sense that institutions has a much higher bar, entry bar, from volume, from KYC, AML, operations, settlement aspects, fund admin, reporting, risk management, and most recently, you have seen also more traditional companies coming into the space, corporate treasurers more specifically, and those people are looking for not just what do I need to buy Bitcoin, what do I do with that Bitcoin? How do I custody this Bitcoin safely? How can I generate yield on that? How can I reduce the volatile aspect of the asset class, yet get exposure to it? How can I get a non-native crypto aspect to the asset class, like the NDFs and alike? So we see more bridging now between the traditional space and the crypto, I call it savvy or crypto native aspects. And you will see a lot more development on the, derivatives, financial products that is going to help us not just attract those traditional companies to the space, but also help them achieve their investment strategy, which is the critical point here. And we can get, maybe if we have time later, into the liquidity, credit aspects, and all the other issues that large institutions like that care about.
Before we jump into custody, which is obviously near and dear
just
to
a comment on that.
Please.
So if you're a blue whale, you're an institution, you're like a blue whale, right? You have your own feeding grounds. If you're a retail guy and you're a killer whale, right, like a smaller whale, you got to buy your stuff somewhere else. I'll give you an example. GBTC right now, it's a grayscale product. You can buy Bitcoin at 10 to 15% discount. Same Bitcoin, 10 to 15%. It's trading at a discount, right? So you're buying it on Coinbase, you're paying full price. You're buying it on Grayscale, you're getting a discount. So at Celsius, we're managing about 20 billion in assets, and we see where the coins are coming from. And I can tell you, the smart killer whales are hopping around. They're always buying where it makes the most sense. They don't like constantly feed in the same grounds. So
that's a good point. I think before we jump into custody, which is near and dear to my heart as Prime Trust, I think you mentioned corporations putting Bitcoin on their balance sheet, which is interesting. Alex, you guys just announced 107,000 Bitcoin in kind of customer assets on the platform, which is a fantastic milestone. Congratulations. If you are one of these corporations and you're looking at putting on your balance sheet, kind of how do you get stakeholder alignment, right? If you're kind of the guy that's championing this, how do you convince the board? How do you convince the CFO? How do you convince these other people who might see Bitcoin as too risky, too volatile to actually adopt it? Do you have any thoughts?
Sure. So Michael Saylor, who I think is speaking tomorrow, is the extreme example of somebody who like basically controls the board, and he can go and they basically say to the company, we're taking all of our money, we're putting it all on red, and that's how we're doing it, right? Most companies, most boards, you'll have really, if you're the treasurer, if you're the CFO, you're going to have a really hard time convincing them that it's a safe bet, it's the right thing to do. And you have to start that very slowly, right? You have to maybe start with stable coins, earn yield on stable coins, right? Like you, at Celsius, you can earn 8.8% on your dollars, and it's backed by a trust company, like a New York trust company like Paxos or Circle or other companies. So I don't think you start with Bitcoin. I think you start with other digital assets. And when your board is comfortable with that, you migrate to Bitcoin and get people more vested in generating some upside, not just generating yield.
What do you guys think for individuals who are a little bit of a different market than the institutions? For the individual whales, you mentioned get your Bitcoin somewhere else. For the two of you, you guys obviously also do high net worth individual business. What do you guys have any tips, advice, tricks for everybody in the audience who's interested in getting in?
Yeah.
Go ahead. No, I brought my my prop here. So if you don't know what to do, here it is. HODL. That's all you need to know. If you don't know what HODL stands for, we have a booth out there. We'll explain it to you.
The best. Mr. Novogratz this morning made the interesting point that we may have a bit of a headwind here as the Fed tucks tail on inflation rising. Look, I was a macro PM for 15 years. It's clearly going to send some jitters through the market. Things will move. But the Fed will also provide a tailwind. As the Fed steps into the breach, as the ECB steps in, as the Bank of Canada steps in, as 2 years from now, we have official sector involvement supporting either stablecoins or having their own digital. Retail investors who have a certain political bent, in my experience, should not fear this. This is something that will bring in the stabilizing large official sector holdings, large corporate holdings, and will get us real product, real tokenized product that is not in competition with Bitcoin. The whole space will be able to rise together. As more institutions get involved, they will have increased confidence from a more stable regulatory and monetary regime in how it treats this. And all I would say is retail investors that sort of had a political bent in this should not run from this more official sector involvement. They should see it, they should welcome it, and they should view it as a bullish tailwind.
Right. Actually, I would like to also add, there is the central bank's argument, but there is also the traditional banks in the space. I think funding is one of the major issues now in the crypto space. How do you get access to cash to buy Bitcoin, or what do you do with the Bitcoin? How do you get leverage or exposure to get cash back? How much interest you pay? So funding is very critical. So at Genesis, we think bringing in more banks, traditional banks in the space, to the game and working with them to actually create more liquidity in the space and offer more products is going to be a critical step towards even maybe getting more adoption from the central banks and alike. And to be more specific about the institutional companies, most of those companies want to work with regulated institutions. And this is how you start the conversation when talking to the CFOs and the GCs. It's not just because regulation means it's great. It's also, it gives them affirmation about what the company is doing overall. What is your exposure? What is your business model? How do you manage risk, liquidity, credit? And this is the things when people want to put large amount of funds with you, they need to understand those well, and they need to understand how do you react in a volatile environment and how you keep their assets safe. And this is more like the traditional aspects. And the other element is the blockchain, and it's a new concept to a lot of those companies. So you need to educate them about what the asset class is, where do we store the assets, why they are safe. And I don't want to go into more like the instant settlement aspects, all of that, but a lot of getting like those large corporations comfortable investing in crypto, it requires a lot of investment from like Brine Brokers and you know, regulated institutions for sure.
You were talking about some of the lending stuff, and I think you guys did, what, 20 billion in originations in Q1?
Yes, our last quarter we have 20 billion of originations, and our lending book is, last quarter was close to $12 billion.
That's fantastic. I think the next logical step, at least in my mind, if you start to hodl a lot of Bitcoin, is how do you earn yield on it, right? And thankfully we have some people that are much smarter than I am about those things. So maybe I'll turn it over to Alex first and then to you on, you know, if you have a new whale that's coming to you and saying, look, I've taken this position, I've amassed this amount of Bitcoin, I'd like to earn some yield off of it, and somehow, kind of what mechanisms are available, what are some trade-offs, things like that?
Sure, so the traditional options are store it in cold storage, don't touch it, wait for it to go up, wait a few years and you'll do just fine, which is okay. I mean, there's nothing wrong with that, and some people use their own keys, some people give it to custodians like Coinbase or somebody else. What Celsius introduced, we were the first ones to kind of offer this on a global scale, is the ability to earn yield by effectively lending your assets to people who are willing to pay interest for it. So in this case, as you mentioned, we paid over 3,000 Bitcoin in interest, in income, to our hodlers. And the people who pay that are institutions who do market making, exchanges who need liquidity, right? So these are very established guys with big balance sheets who just don't want to take directional risk on Bitcoin, right? So if I want to do market making because the price on Coinbase and Bitcoin and Binance is different, right? I have to buy on one exchange and sell on another exchange. But if I buy the Bitcoin and do that trade and Bitcoin drops, I lost 10, 15% on the Bitcoin. If I borrow it from Celsius or I borrow it from the community really, then Bitcoin drops, I just return the same Bitcoin, and the community for a short period of time lost that value. But I as a trader didn't lose it. So that's why there's huge demand for borrow. And again, Celsius is one of the largest providers of all that liquidity, and we extract all that yield, pay 80% of it back to our depositors, our users, right? And that's really the innovation. Wall Street has been doing SEC lending, the equivalent to what we do, for 100 years. They've never paid. Any of you got a check from JP Morgan or State Street or Fidelity or Robinhood? Guess what they do with your stock? They lend it out and make money. So what Celsius has done is basically extracted 80% of that back to the community, right? 3,000 Bitcoin and running.
Your thoughts?
Any Celsians here? Anyone using us? Here we go. Few hands.
Yeah, I mean, at Genesis, we take very traditional approach into our lending book. Basically now, we believe we are the largest institutional lending book now in the market. And we started the desk really in 2018. It's more like a friends and family. And it grew a few $100 million in 2018, maybe close to $500–600 million the year after, but now it's at $12 billion. What we do, we are in a unique position because we have a large trading operations globally, spot market, derivatives. And when we look at the lending book, aside from the demand and supply aspects, we understand the funding market very well in the space. We know where the liquidity pools are. We have one of the largest, most diverse client base globally. And that allow us to actually, across people, lend, borrow, keep our balance sheet moving at all times. At the same time, we implement a lot more traditional measures around how we manage the book, how we keep liquidity. And again, having the spot operations, derivative operations, we can see a lot more information about the market and how we should position our lending book in a way that if volatility is high or the market selling off. So that gives us a lot of room to actually manage the book and pay the best interest yield possible to our institutional clients. But this is just the traditional space. We offer a lot more products actually. People want to come get leverage. For example, Bitcoin is our 50% of our lending book, like origination was in Bitcoin last quarter. Bitcoin is like the gold of the collateral, alike with cash. And many people come in and they say, I have 100 Bitcoin, I want 300 Bitcoin exposure, right? So we offer leverage products, but it comes with very also a strict risk program around margin calls and all of that. And I mean, knock, knock, but we have been doing this for 3 years, which is like infinity in the crypto space. And we have been doing very, very well.
You know, I'll just chime in. We have a unique, across our family of companies, we have a unique traditional business and we have a unique crypto business. And I'd say the borrowing and lending aspect goes both ways. This is a $1.5 trillion, $2 trillion space right now that's largely unbanked by the fiat money center community. For our traditional asset managers and hedge funds, there's a clear opportunity that they're taking advantage of to provide dollars into this system, achieve very attractive fiat yields for providing 50% LTV type loans to this space. In this way, a space that is undercapitalized from a fiat perspective, because there are physical assets. If you're a miner, you need to buy machines, and the list goes on. There's tax efficiency, et cetera, et cetera. We're seeing a real transition right now through borrowing and lending for traditional asset managers and hedge funds to get their feet wet in the space. And as they do that, as they get wallets, as they figure out custody, as they figure out these pieces, their gateway, if you will, is in being the traditional lenders they know how to be in traditional fiat. And so I think the borrowing and lending works both ways, and it's really going to cross over the classic world of Wall Street and this new crypto native world. And we're seeing that borrowing and lending really span both sides of the wall.
I think this is going to be a bit of a loaded question, but obviously self-sovereignty is a really core tenet of the Bitcoin community. If you're a whale out there and you're looking and you're trying to decide, am I just going to hodl, am I going to keep my keys and do things like that, or should I be earning yield on these assets? I would imagine, especially for institutional buyers, that's probably a fairly hotly debated topic in the boardroom, right? What would you guys say, again, maybe starting with Alex and working our way down, what would you guys say would be the top criteria for making that decision? What are the most important points to consider that would tip the scales one way or another?
Yeah, so look, crypto started with not your keys, not your coins. And I think we kind of exhausted the people that are good at managing their own keys, right? We have like 3 or 4 million coins that have not been touched for several years. So obviously, even the pros don't know how to manage keys well. So you want to bring the next billion people into crypto to hold Bitcoin, they're not going to be able to manage their keys, right? So you want your coins, you want your bags to be worth more. You got to make it really simple for those people who don't know a private key from a public key, right, to come in and benefit. And one of the benefits is yield, right? Because the banks, the central banks, don't offer yield anymore. And here you can earn 6% on your Bitcoin. It's a no-brainer for most people. So offering, like what Celsius does best, is offering that bridge, right, the ability to interact with a wallet exactly the same way like you interact with your Twitter account or Facebook account. You forgot your password, you can reset it. You know, somebody else keeps it safe for you. And by the way, while you're sitting and waiting, it earns yield as well. So corporations, to your point, corporations see it exactly the same way. Because corporations have, okay, can I entrust one of my employees, only one, to have a key? What happens if they run away? What happens if they leave the company and so on? So there's all these issues that have to do with custody that are solved by having a platform like Celsius. So we have thousands of corporate accounts, and I can tell you that a lot of the treasurers and the CFOs who deal with buying and managing this stuff look at it, okay, who is my custodian? How do I do multi-sig, meaning I need 3 signatures, for example, to withdraw a deposit, and all these things matter, and that's how we grow the community. We grow the community, the price of Bitcoin is going up.
Ian, I'm going to modify the question a tiny bit for you because I love your traditional background. If you have someone that's new to the crypto space and getting into it, how do you explain this concept to them?
Right. This is the key operational pinch point for hedge funds that we're talking about, is how to custody. We can introduce them to folks like yourself. You know, the expectation is that the Bonies of the world get into this in a robust way. Yep. But there's got to be a very good custody solution. I don't think you're going to see multi-billion-dollar hedge funds and asset managers cold store keys in the desk drawer, you know, of their COO or their head of operations. I just don't think anybody wants to bear the liability for that. I don't think that's going to make anybody's LPs comfortable. I think we need some industry standards. We need some industry best practices. We need some idea on a regulatory piece for some degree of indemnification on the risk associated with that. And so whilst public blockchain is the better form of money, whilst it is the future of finance, there needs to be some area here for these fiduciaries to get some protection operationally and otherwise in how to be able to hodl, hold, trade, store, custody. We're going to have to solve that piece in a very serious way to get the next 100 million wallets and the next million very high-grade institutional wallets in the game.
I'm going to give you the last word as we're running out of time here a little bit. How do we get to that next step in your eyes that Ian was just talking about, having to get to that next step for these institutions to come in?
Well, in the interim, we are working to be single point of access for Brine Brokerage for our clients. So basically, our clients come different flavors. The long-term investors who just want to hold their Bitcoin, we built our cold storage solution where people can park their assets there for life with the right controls. But for people who are deploying assets and they need intraday liquidity, all of that, we facilitate this. At the same time, we assure them through our regulated entities, through our credit buffers, all of that, that we are able to service them on day-to-day and settle properly. So again, you get different flavors of all those people. But at the end of the day, you need to be able to explain the technology, offer the solutions, and offer the right products, which is around lending and derivatives and alike, where people want to come to you to do everything at once and for good. What's happening now is the market a bit fragmented. A few companies are known to be the best at certain things. And we are not like the traditional Brine Brokerage where people connected and you can settle easily all of that. But I think regulation will help tremendously the space. I agree with Ian. And I think it's going to help all of us open up the door for people to even face multiple Brine Brokerage. We don't want to repeat the story of the crisis where people were facing one brokerage, everything was gone. All even large institutions now work with different prime brokers to diversify, and we need to get there.
Gentlemen, thank you for sharing your expertise with everybody out there. For everybody out there, all these fine gentlemen and Prime Trust and Bank all have booths outside in the exhibition hall. If you have more questions or want to follow up on any of the topics, I'm sure they'll be more than happy to talk to you over at the booths, or people from their teams will. No, thanks, guys.
Thank you very much.